You should never let your fears prevent you from doing what you know is right. Good evening everyone, I am your speaker Neerav Shah and welcome to the Jambi Research Institute Stock Market Training class. Firstly, congratulations to all the students who followed today's trading instructions. IPO gained 30% in profit, block trades gained 40% in profit, and adding the UCs, the profit for today stands at a whopping 75%. As usual, let's start by taking a look at today's indices together. Sensex Nifty closed higher after falling 1%. Intraday analysts say exercise caution. The Sensex and Nifty 50 fully recovered from the day's lows on May 13 and closed in green after falling almost 1% each in the morning trade. Commenting on the benchmarks pulling away from their day's lows, Ajit Mishra, SVP of Research at Relier Broking, said that its rebound could merely be a breather. He cautioned against over-interpreting the bounce back, noting that the India 26 is still up by 12%. Now we will talk about IPO's company name, offer price range. Indian Emulsifiers Limited, 125 to 132 rupees. ABS Marine Services Limited, 140 to 147 rupees. Veritas Advertising Limited, 109 to 114 rupees. Mandeep Auto Industries Limited, 67 rupees. Premier Road Lines Limited, 63 to 67 rupees. Aztec Fluids and Machinery Limited, 63 to 67 rupees. Biotex Industries Limited, 94 rupees. Energy Mission Machineries India Limited, 131 to 138 rupees. Also we will talk about indices overview, index name and percentage change. Nifty Bank, 0.70% change. Nifty IT, 0.42% change. Nifty Auto, minus 1.68% change. Nifty 50, 0.22% change. And Nifty Pharma, 1.77% change. Now we will talk about industry index. Banks, IT software, power, auto, financial services, gas and petroleum, auto ancillaries, cement, construction, defense and tobacco all are fall. And diversified, FMCG, pharmaceutical, NBFC, metal failures, telecommunications, engineering, real estate and consumer durables all are rise. Okay, that's the general news for today. Now, I will tell you, yesterday we focused on sharing knowledge about money management and techniques for observing the market at the opening. Today, we will discuss how to observe the market during the closing session, which corresponds to the techniques for observing the market at the opening. The closing session being the summary and end of the day's trading is when the battle between buyers and sellers is most intense. This period, known as the tail end, greatly influences the next day's market direction and serves as a storm indicator. Therefore, observing the market during the tail end is crucial. At this time, fundamental analysis is highly emphasized. The tail end is generally defined as the last 15 minutes of trading each day. But the battle between buyers and sellers starts as early as the last 45 minutes. If prices rise from the last 45 minutes to 35 minutes, the day's trading will likely end with an upward trend. Therefore, many investors engage in trading during the tail end, and once an upward trend is confirmed, a continuous influx of buying orders pushes up the stock index. On the contrary, if prices fall from the last 45 minutes to 35 minutes, the final trend will likely be unfavorable. If there is a bullish trend during the last 30 minutes, then generally prices will close near the day's high. And if there is a decline in the last 30 minutes, followed by a rebound and then another decline, such a trend can be highly damaging and may lead to a downward spiral until the end of trading. The closing price is crucial in assessing stock price trends. It refers to the price of a stock at the end of trading. The closing price holds significant observational value within a trading day, indicating the level of market attention towards the stock. Moreover, it serves as a predictor for the next day's price direction. Therefore, the closing price is worth paying attention to. We primarily compare the closing price with the day's opening highest and lowest prices to assess the trend. If the closing price is higher than the opening price, it signifies some resistance. Conversely, if the closing price is lower than the opening price, it indicates significant upward pressure on the stock and a potential need for adjustment. The tail end marks the conclusion of a day's work and serves as a summary of the battle between buyers and sellers throughout the day. Its importance has always been emphasized by investors who value its closing index and closing price. It plays a pivotal role both in reviewing and summarizing the previous market conditions and predicting future market trends. While the opening sets the tone and the midday represents the battlefield and the process, the tail end signifies the outcome and the verdict. If the market closes in the green during the tail end, especially with a very long lower shadow, it indicates a strong rebound after probing the bottom, suggesting potential for follow-up. In such cases, there is often a higher chance of a gap up opening the next day, offering profit opportunities. Buying in at the last moment carries lower risk in this scenario. If the market closes in the red, partially with a long upper shadow indicating strong resistance overhead. It might be prudent to consider selling of some holdings rather than initiating new positions. There is a probability of a gap down opening the following day. Additionally, if there is a surge in volume during an upward trend at the tail end, it's advisable not to enter the market as heavy selling pressure may occur at the opening the next day, making it difficult for prices to rise. Conversely, during a downward trend, heavy volume at the tail end signals a likelihood of a gap down opening the next day. Minor fluctuations during a trend, whether upward or downward, are merely correction phases at the tail end and hold little significance. When it comes to the closing index and stock prices, both bulls and bears engage in fierce contention. But it's essential to understand two key points. One is to be cautious of major players manipulating technical indicators, deliberately driving up the index or prices to achieve a gap-up opening the next day, allowing them to unload their positions and make substantial profits. To identify these market manipulators, these are two methods. First point. Look for a significant trading volume accompanying the movement. If there is a large volume coupled with price increases, it could indicate a trap set by the bulls to offload their holdings. Consider whether there are bullish or bearish new catalysts and analyze them in conjunction with the trading volume. It's advisable to refrain from being fully invested or completely emptying your positions. The second point involves the Monday effect and the Friday effect. Since Monday marks the beginning of the week, it influences the weekly stock price spread. On the other hand, Friday represents the end of the week, reflecting both the day's performance and the overall balance of bullish and bearish forces for the week. It summarizes the previous market conditions while also providing insights into future market trends. Of course, there are many techniques and methods to apply when observing the market. Mastering these skills is like finding shortcuts to quick investing. They can help us achieve more with less effort in stock trading. Below is a brief summary for your reference. Point number 1. In every sector, there are leaders. When we spot those that consistently make profits and continue to rise over the long term, we might consider following their lead, quietly profiting from short-term gains. Point number 2. Check the trading volume and position. If the volume is high and the stock is at a high position, it suggests an impending decline. So it's wise to sell all holdings. Conversely, if the volume increases at a low position, it indicates a potential rise and buying all it might be considered. When the volume is low, it's uncertain, so consider buying in steps. Point number 3. Buy during stock pullbacks with shrinking volume and sell when pullbacks volume increases. This means buying when a stock temporarily pulls back during a rapid rise and volume decreases, then continues to rise. If the pullback volume increases significantly, indicating a potential reversal and the end of the upward trend, it's advisable to sell all holdings. Point number 4. Buy when the relative strength index RSI hovers at low levels for 3 times. In short-term investing, RSI serves as a useful reference, representing the strength indicator used for measuring the analyzing stock price movement. When the stock price hits new highs but the RSI fails to follow suit, it's a signal to sell. Buy when RSI is below 10 and sell when RSI is above 85. Sell when RSI hovers at high levels for 3 times. Point number 5. In stock market trading, avoid categorizing stocks as good or bad, as we can guarantee they always remain good. In the stock market, there is only differentiation between strength and weakness, with survival of the fittest. Thus, stocks are either strong or weak, and market players are either strong or weak too. Point number 6. Generally, when moving averages cross, there is a technical pullback. Buy when the cross is upward and sell when it's downward. Technical pullbacks aim to repair technical indicators and shake off some unstable profit-taking positions to pave the way for further upward movement. It's generally bullish afterward, provided you accurately discern whether it's a technical pullback or distribution by market players. Otherwise, there is the risk of getting trapped at high levels. Point number 7. Always have a sense of timing when trading stocks. Seize the opportunity and act decisively. When it's time to chase the rise or cut the loss, take action accordingly. Point number 8. During a broad market downturn, it's best to start by selecting stocks. Look for those that either rise first or decline the least and consider investing in them. Point number 9. When 3 consecutive large bearish candles appears at a high level, it indicates an impending downturn with significant magnitude. It's crucial to sell quickly, even if it means incurring losses, to avoid catastrophic losses. Conversely, when 3 consecutive large bullish candles appear at a low level, it signifies the beginning of an upward trend, indicating the start of a recovery. Point number 10. During an upward trend, there might be some dark horses which could be lesser known stocks or troubled stocks. Therefore, it's important not to underestimate any stock. Point number 11. Setting stop loss levels is crucial. Establishing stop loss levels means defining the maximum loss we can tolerate, which helps mitigate risk. Even incurring losses would be within manageable limits. Preventing significant losses, therefore, is essential. So, this sums up a comprehensive overview of market observation and techniques, along with the explanation provided yesterday. It's important for everyone to carefully review and master them. To excel in trading, especially for retail investors, to survive among institutional investors, one must become highly skilled rather than being mediocre. Otherwise, the longer it takes, the higher the probability of overall losses. Many friends are not fond of rigid stop loss strategy and often inquire about how to average down in a losing position. I will share some insights on this with everyone tomorrow. Now that we have discussed techniques and relevant knowledge, let me also talk about what everyone is most interested in: the profit plan and the future operations for our well-strong investment. In 2024, Jambi institutions launched a new partnership plan with retail investors called Well-Strong, aiming for a total profit of 480% and above, divided into 3 stages. First stage aims for a profit target of 100%. Second stage aims for a profit target of 280%. Third stage aims for a profit target of 480%. This trading plan signifies a long-term mutually beneficial partnership between Jambi institution and individual investors aimed at expanding into the Indian investment market. The program progresses through 3 stages, starting with the first stage, which primarily involves accumulating funds through UC and BT trades to achieve wealth growth and prepare for the subsequent stages. The overall profit target is set above 480%. Jambi institution will ensure that each stage meets its predetermined goals by sharing its trading privileges in the market. I am sure everyone is aware that the first phase of our well-strong profit plan has been achieved. Those who haven't claimed their rebates yet should hurry up and contact me. The rebate for the second phase is 10,000 rupees and for the third phase it's 1 lakh rupees. But there are still a small number of friends who haven't strictly followed the instructions. If the strategy isn't adhered to, actions will be taken on their accounts. Please cherish this well-strong profit plan. Of course, besides rebates, don't forget about our recruitment program. Next, let me explain some details about recruitment program. Dear friends, we are a professional organization deeply involved in studying profitable strategies in the market. We are committed to exploring market trends, identifying investment opportunities, and providing practical profit-making strategies to investors. To expand this influence of our organization, we sincerely invite aspiring individuals to join our team of market partners. If you are passionate about market expansion, skilled in interpersonal communication, and eager to explore new opportunities in entrepreneurship, we welcome you to become our market partner. First point, market partner recruitment plan. When encouraged, every market partner to actively refer members to learn about our organization and invite them to participate in our programs. As long as the referred members agree with our organization and culture and successfully join us, the market partner will enjoy corresponding profit sharing policies. Market partner levels and profit sharing standards are as follows. Here's the first point, junior partner. Successfully introduced 3 people to join and enjoy junior profit sharing benefits. Receive 1,000 shares as a gift. Second, intermediate partner. Successfully introduced 5 people to join and enjoy intermediate profit sharing benefits. Receive 2,000 shares as a gift. Third, senior partner. Successfully introduced 10 people to join and enjoy senior profit sharing benefits. Receive 5,000 shares as a gift. And the fourth one, special partner. Successfully introduces 20 people to join and enjoy special profit sharing benefits. Receive 12,000 shares as a gift. Point number 2, self-owned trading fund pool and sources of profit sharing. The profit sharing comes from our organization's self-owned trading fund pool. This fund pool mainly consists of 30% of the profit paid by clients to the financial department of the business school, aiming to achieve resources, sharing and win benefits. Here is the third point, allocation method of self-owned trading fund pool. To ensure that the fair allocation and efficient utilization of the fund pool, we have formulated the following distribution method. 30% of client profits are allocated to the financial department of the research institute. The specific purposes are as follows. 10% allocated to fund foundations related to social welfare such as children's and women's rights protection for social welfare undertakings, and another 10% allocated to cooperative funds or brokerages. Institutional resources are not provided for free. And the third 10% allocated to the business schools to expand the self-owned trading fund pool for future profit sharing among partners from the fund pool. We firmly believe that through collective effort and fair distribution, the self-owned trading fund pool will achieve continuous growth, bringing more profits and opportunities to every market partner. If you are interested in our recruitment plan, please contact us, and we will provide you with detailed cooperation plans and support. We look forward to your participation in creating a better future together. Of course, some people have expressed concerns about what would happen if there were losses. Just once again, I want to make it clear that if there are any losses, we at the Jambi will take full responsibility and compensate by providing another super bullish stock so
So everyone must remember to strictly follow instructions to ensure eligibility for compensation and maximize profits. This afternoon, after the market close, we purchased block stocks of Smart Link. We will notify you to sell on Wednesday. Please ensure strict adherence to all operations to maximize your profits and minimize risk. Currently, our well-strong profit plan has reached a profit of 160%. Plus, with today's block trading at a 30% discount, I believe we will soon accomplish the second phase. This is achievable only with your trust in us and strict adherence to all instructions. We will also have an IPO operation tomorrow, and the expected profit is around 150%. You can ask my assistant for an appointment in advance. Only by preparing in advance you can seize the opportunity. On behalf of all the teams and individuals involved in the well-formed profit plan at Jambi, I, Neerav Shah, express gratitude to the revered God and all the members and students who trust us. We promise to lead you all to new heights. That concludes my sharing for tonight. Thank you everyone and see you tomorrow. Good night.